Okay, welcome again, everyone. Let's officially get started. Welcome to today's webinar titled The Three Most Effective Strategies for Managing Your Retirement Portfolio. My name is Jim Penn. I'm the Manager of Retirement Services here at VectorVest, and I'm really excited about this. I hope you guys are as well. In fact, my promise to you today in this webinar, you're going to see how you can build wealth, transform your legacy, and live financially free. Now, I know you probably get flooded with emails and letters promising you to help you in your retirement, and you're probably skeptical, which I don't blame you for. And if I were you, I'd be sitting there and said, "Go ahead and prove it, right? Prove it to me." Well, we've been doing this a long time. In fact, VectorVest started back in 1988. One example of many I'm going to show you over the next hour or so is that back in 2017, we began tracking a retirement growth portfolio, and it's averaged to this point about 45% a year. Now, there are different time frames, right? The longer term, the more productive and more profitable a lot of these portfolios are. There are short term trends that will make these rise even quicker. There are times where the portfolio, nothing goes straight up, where the portfolio takes a little bit of a hit. I'm going to talk a lot about uh, preserving your net worth, preserving your capital. So just a quick glimpse at when you do it right, how you can build and manage your retirement portfolio. Another portfolio which uses a strategy that you'll learn today was this one is a little longer term. This was back in 2013. This is a dividend portfolio, right? A dividend growth portfolio. This portfolio is averaged about 22% annually, and that doesn't include the dividends that have been paid out. There's another 50 grand on top of this, $187,000 that we're up on this $100,000 portfolio. And it also doesn't include reinvesting those dividends and getting the power of compounding those dividends. So there's a lot of potential out there for us. Now, one of our clients, Jerry, told us about his ability to generate consistent monthly income now after going through our training. Okay, he went from being hit or miss with his trading and having no methodology to where he's now generating 2% extra income each month. Right. And even better, we had the opportunity and the pleasure of talking with Jerry. And he said the reason at first it wasn't higher when we actually talked to him is because he kind of branched out on his own and didn't really follow the process. He said it would have done even better. So now he's even following the process. Well, this webinar is built on results, and I'm going to show you the system we use to achieve these results. So what I'd like you to do is turn off all your distractions and try and stay focused. Right? If learning this sounds good to you, it's a great time to turn off. I know you're not going to turn your cell phone off. Put it on vibrate. Close the door. Close the other windows on your computer. Whatever you have to do, because if you multitask, I'm afraid you're going to miss something important. So you want to stay focused. Give this your full attention because you'll be learning something that can make a huge positive impact on the rest of your life. So um, here's how to know if you're in the right place today. Here's where we'll start today. You're in the right place today if you're worried about the next market collapse wiping away a good chunk of your nest egg and it's causing you to be ultra conservative and not getting the gains that you see others getting, right? It happens to a lot of folks. You're afraid to be in there even though the market keeps rising. You're in the right place here today is if you want to grow your account steadily each year. But it seems like every time you buy something, the market or your stock drops and your portfolio goes nowhere. Okay? You're also in the right place today if you don't have an income source that is as steady or as big as you need it to be, and it's causing you to scale back your lifestyle and not do the things that you want to do. Okay? That's a good reason to be here today. Maybe you fear that you won't be able to retire when you want to, and that you might need to rely on others to take care of you. Right? That's a tough one as you reach retirement. And finally, you might be one of the many people over 65 who still have to work, not because you want to, but because you have to, right? Or you're worried that you'll end up in that position. There's nothing wrong with working till you're 80, right? If you want to, right? That's the key to that. Okay. So let me ask you guys, and like I said, we're going to interact a lot today. Let me ask you guys, does any of that ring true for you? Okay, let me know in the chat box. Any of those, just type in yes. You don't have to type in too much information there. Yeah, James says, heck yeah. A lot of, yeah, it takes a minute for him to come floating through here, but I'm looking at the chat box and a lot of folks are typing in yes here. Well, listen, then again, you're in the right place. After decades of working with retirees, we've identified the root cause, right, for all those potential pitfalls that we just talked about. And we found that the real problem is your entire retirement investing model is broken. All it takes is a couple of minor tweaks and you can get it fixed. And once you've fixed it, your retirement will be on much more solid footing. And that's what our goal is. And that's what we're going to do today. The model we use, and as I said earlier, have proven to work, is what we call the 3 P's of investing, right? We call them the 3 P's. First one is profit, a growth portfolio, capital appreciation, however you want to label it, right? And when we talk about profit, it's a nice steady growth. We're not looking to double the size of our portfolios every 3 months here. It's not trading. It's an investment plan that grows your portfolio. The second P is about provide, right? Providing income. And then, as I said, preserving your capital, which to me is most important, right? It's the protection of your capital appreciation. So, or of your net worth, I should say. So, capital appreciation, providing a safe, steady income, and then most importantly, preserving your capital. Okay. So remember my promise from earlier: build wealth, transform your legacy, and live financially free. You need to grow your investments to be able to do that. You need to be able to generate income and protect your capital. When you do all three of those, right? When we're able to do all three of those, that's when we can achieve financial freedom. So the first shift you need to make is to shift from not being in control of your own retirement to where you take control of your retirement, right? After all, who cares more for your money, you or someone else? So you might think you don't have the time or the knowledge or the skill, but you're going to see today, before we're done, that you can do it, right? It doesn't take a lot of time. It does take some time. I'm not going to lie to you. This isn't, that you just kind of set, forget, and you don't have to do anything, but it doesn't take a lot of time. The knowledge that you need is right here at your fingertips, and I'll show you how to leverage off others so you don't have to do everything yourself. I'll explain that in a bit. So now you decided to take control. That's why you guys are here, I think. That you've decided to take control. Let's look at the 7 signs that your portfolio will not be ready for retirement. Right? Even though most people say they care more about their money than anyone else, what do most people end up doing? Right? What do most people end up doing? Well, here's what happens. Number one, most people will trust that Social Security will be available to provide the income needed to retire happily. Okay, now that has several problems to it. We noted that 60% of non-retired workers currently feel Social Security won't even be around when they retire. And even if it is, the Social Security website itself states that Social Security was never intended to be someone's sole source of retirement income. The average Social Security benefit is just over $1,500 a month before Medicare premiums are deducted. So on average, you're left with about 16 grand a year, give or take. So that's not really going to be enough. So what else do people do? Well, it makes sense. It's logical that you'd want to save, right? You want to just save your money. You put your hard-earned money away, counting on it to be there when you retire. However, with interest rates so low, which they've been for a while, and while they may raise some, it's going to be a while before they continue to rise. At this point, inflation is actually higher than the interest rates you're receiving. So by saving your money, you're actually losing money because your dollars are getting devalued, right? Because they're not growing. So while it's important to save, we can't go too far and put it all under the mattress. Otherwise, it does become devalued. For some, they just take this set it and forget it about it approach. Right? Just put it away, put their money in a mutual fund, an IRA, 401k, whatever it is, hope for the best. Unfortunately, when the market drops and wipes out 30 or 40, 50% of that, many people end up delaying retirement or even may have to go back to work. Okay, now I'm not predicting some major crash in the market, but don't forget there have been 30 and 40% moves in just the last few years. We don't have to wait a year to have to try to get back to where we were before it happened. So set it and forget it is not going to help us. Now, when all else fails, you can always play the lottery, right? I remember there was a commercial which advertised the lottery. It said all it takes is a dollar and a dream. Right? You guys probably remember that. Well, for many, that $1 turns into two, and then 10, and then 50. Sometimes you end up spending a few $100s a month on those dreams, kind of reaching for straws there. So I can tell you that is not the best retirement plan. You can hire someone to make decisions for you, right? That's what Rob did here. One of our subscribers, he retired in 2005, and as we all know, the financial crisis hit in late 2007. And he said we had used professional advisors for direct shares and a few managed funds to build up our retirement portfolio, and they all told us to ride it out. By mid 2008, our portfolio had lost 40%. Our retirement plans were in ruins, and we were in total despair. And it looked like we'd have to go back out and get a job. Okay, that's what happens when you hire someone, especially the wrong person, to manage your money. Now, this may not be as dramatic a drop as Rob had, but Carol described for us another typical result. Right? She hired an advisor in 2013 to help manage her inheritance after her father passed away. And she said by early 2017, she had finally had the time to go and take an in-depth look at what that broker that was hired was actually doing. And she said she was shocked. It was a mishmash of cookie cutter funds, and after the fees, the net result was about 1% annual return during a time when the market did much, much better. Okay. Next, your portfolio is probably not ready for retirement when you decide you have to spend less, because what happens is you end up tightening the wallet, right? And when you're spending less, or if you're cutting back on your spending because you're worried, it's just another sign that you don't feel confident or comfortable as you head into retirement. And then finally, if you decided to work longer than you originally intended, right, it also means your portfolio may not be ready. Again, to me, there's a difference with having to work and wanting to work, right? Having a job and or needing a job and wanting to work, to me, are two different things. So the key here is doing what you want to do, what you choose to do, or have the ability to choose. So if you notice, there's a theme there. If you're exhibiting those signs, it's a clear indication that you need to take control, right? It's that next strategic shift. Okay. Remember, there are hundreds of thousands of people out there, just like Rob and Carol, who trusted their money to people who thought they were more knowledgeable, more skillful, who ended up losing 40, 50% of their retirement savings and not coming near achieving the gains that they expected. So even if you have a financial advisor managing some of your money, you certainly do need to pay attention. So the strategies that will give you that we're going to talk about will give you the techniques to both manage your own money as well as give you the information you need to watch over the work done for you. If you do have somebody else doing it, you'll at least know what to look for. So as we go through these strategies, I want you to see how there are things that you can do, and you can do these things. I hate to put time frames on things, but you can do things, 30 minutes a week, an hour a week, as much time. I mean, again, I'm never going to say you click a button and you don't have to put any effort or time. Right? I'd be lying to you, but you don't have to put 20 hours a week to build and manage your retirement portfolio. Okay, so let's go ahead and do that now. All right, let's go ahead and do that now. Are you guys with me? Ready to go? Let's jump into this. Let me know you're with me. Just type in yes. There we go. All right. Yes. See, whenever I do that, somebody says, "Yes, hurry up, get going, will you?" Okay, let's get going. All right. Again, you've decided to take control. That's why you're here. So the first thing you need to do is protect your assets. I'm going to start with the preserve P here. As I say, to me anyway, still the most important that you have, or that you should be aware of and understand how to use. right? The great hedge fund manager Ray Dalio once said that, you can't grow your money, you can't grow your net worth without taking some risk, and that you cannot keep your money or your net worth without being defensive and understanding how to protect your assets. Okay. So instead of worrying about the next market collapse wiping away your nest egg, we need to put it bluntly, protect your assets. So you need a strategic defense system to do that. Now, a lot of people get caught by surprise when the market drops. And after it happens, you hear the people on TV and advisors talk about, well, what should I do now to try to make my money back? What should I do now to try to get my money back? Right? Well, instead of listening to them, you need to know when the market is toppy, when it's overbought, when it's time to be, again, strategically defensive. And you have to know when and how to insure yourself. Right? You insure your home, your car, your life, your health. I laugh. My wife and I, we have dog insurance, for crying out loud. Right? So it makes sense that you would do it for your money that's in the market as well. So here's a look at the market on a market timing graph from the VectorVest program. This goes all the way back to 1999. Right? So let me know real quick in the chat box if you ever bought or owned a really good stock and watched it drop when the market dropped. Right? And I'm not talking about it, just any ABC stock. I'm talking about a good stock, right? Stock that you say, wow, this is a company that makes money, and then you're left scratching your head as you watch it drop, right? And Spencer, yeah, of course. Two people right in a row said, of course. Yep. A lot of yeses. Yep. Heck yes, Paul says. Okay. Um, we've all been there, right? We've all been there. So let's zoom in. So again, this is since 1999. Let's zoom in on a few of the biggest market moves that crushed a lot of people. So I just want to, again, lay this foundation here of how important this is. I'm going to guess there are people in the room today here who held stocks or managed funds through the bursting of the dot-com bubble. I know I was working on a trading desk as a market maker during this time here, so I remember it very well. What happened during the dot-com bubble? Okay, right. So one of our subscribers, Lynn, told us that during the dot-com boom that he took $80,000 and increased it 5 or 6 times. However, in 2000, I proceeded to lose almost everything over the next 2 years. And to use his words, he was angry and needed someone to blame. Right? And that happens way too much. You make money during the uptrend, and if you don't know how to protect it, you give it all back, and then it takes a whole lot of time to try to get back to simply where you were. Right? Again, you have to take risks to make money. Right? But you have to understand how to be defensive to keep your money. Otherwise, you're wasting your time. Okay. If I continue to scroll in here, in 2008, when the housing bubble burst, right, the average mutual fund dropped over 40%. 40%. And many people were like Robert, who we talked about earlier. He lost 40% of his retirement and thought he'd have to come out of retirement and go out and go back to work. And just last year, right? Now this was a much shorter lived move, but the S&P dropped 34%. How many of you had your financial advisor call you leading up to any of these events to warn you? Right, Don said he lost 80% during that time, so it can get even worse. How many of your brokers or financial advisors called you to warn you? I doubt there were many phone calls over that period telling you to get out, become strategic. You know, I don't know of brokers or money managers who would call and tell you that you should understand what a put option is so you can insure your portfolio. I'm sure that doesn't happen, or doesn't happen often. But after the event passes, you might get a call saying, "Oh, by the way, you just lost, 30, 40, 80%. Sorry about that. Let's see what we can do now." Well, we don't need that, right? We don't need that. So again, here's the S&P dropping, again, 34%. Right? That's just last year. Which brings us to today. Right? So many are worried about the next market collapse. Some people say you can't time the market, right? And the people who say that, they can't, because they don't understand the concept of it. The truth is that you can't predict the market. And here at VectorVest, we don't pretend to be able to predict where the market's going. But you can time it based on trends, based on 30 years of following market trends that raise tremendously the probabilities of being on the right side of the market when we need to be. So that's what we do. We can analyze what's going on, recognize the trend, and take the proper steps. So even though the markets on a daily basis may have ups and downs, if you look at the big picture, you can clearly see the major trends in the market. You can even see smaller trends within those big trends. So we may see the market on a daily basis go up and down, but it does over time trend in a given direction, even though during that, whether it's a downtrend, you'll see up days in the market and vice versa. Surprisingly, you don't hear this information from the talking heads on TV. They rarely would say, hey, it's time to get out. The market's in a downtrend. Right? It's very rare that you hear that. So what that leads to is, you have to be careful where you get your information. Right? It's good for their business when people are investing in the market. Advisors still get their fees whether the market goes up or down. So you need to be careful where you get your information. So let's look at how to use the right information so you'll never be on the wrong side of the market for more than a week or two, right? We recognize the trend, the longer term trend. It takes some time, right? They say the old saying, one day doesn't make a trend. So what you're about to see will ensure that your portfolio never collapses again. So you want to make sure you have a system that allows you to determine the overall market direction. Some people use things like moving averages on the S&P. There are other ways to do it. I use the guidance from VectorVest and I've been here over 15 years, and that's the way I do it. Whatever you do, I suggest that you try not to listen to those talking heads on TV. Instead, you should have a system which is not emotional, which is based on empirical data, and has an historical track record. Right? We all get emotional. I'm not going to lie, I do too. Right? But you got to be able to overcome that. So let's take a look at a few major market moves that we talked about earlier. That were, if you've been in the market for these times, can be life changing, right? So we remember back in 2000, we talked about 2008, we talked about the pandemic. These are the extreme examples. There are others within those time frames, but for the sake of time, I'm going to focus on a few of these. Let's start by looking back at the bursting of the dot-com bubble. Okay, every night, VectorVest provides guidance such as this. This is back in March of 2000, right? We wrote in our strategy section, I believe that the rally is exhausted, downside risk outweighs upside potential. Prudent investors should protect profits and take defensive actions such as buying puts. Consider any rallies as opportunities to sell stocks at higher prices. There is no more clear information or advice that you can find. Right? That might have benefited you back then. I can ask you guys to type in. Do you think it might have? Might that have been a good time to know that we need to be defensive in the market? Well, let me answer it for you. I know it would have. Okay. Let's fast forward to the next big market collapse, and we'll talk about the housing bubble. Again, I'm using the obvious, big market moves here. On November 2nd, 2007, just days off the market top. Okay. Dr. Delito wrote in our strategy section on Friday night, November 2nd, that the confirmed down signal that we received yesterday, that's a VectorVest timing signal, could be the entree to a long bear market. We aren't there yet because earnings are still rising according to our method of analysis. Yet we no longer appear to have the support of an accommodative Fed. Fast forward, this will start happening soon, and that can make things very bad for the stock market. So don't be deceived by the endless parade of experts who will appear on TV and other places telling you to buy stocks. This is not the time to buy. Again, pretty good advice, I would say. All right. And then finally, let's move to the most recent drop, which happened again. We all know about the pandemic sell-off, which happened just last year. This was back on February 14th, just days before the peak. we noticed warning signals in our market timing indicators. Again, we didn't predict what was going to happen, okay? But a week before, roughly before this sell-off, the price of the composite, it read again in our strategy section, okay, hit a new high. However, as the price of composite hit a new high, the buy-sell ratio closed lower. That's one of our proprietary indicators. To add to that, if we look at a 3M market timing graph, a 3-month market timing graph, we can see that the BSR, RT, and MTI closed higher week over week. They're at lower levels today than they were during the January high. So what we call that is a bearish divergence. And again, remember this phrase, it suggests that downside risk outweighs upside potential. That's what we said back in 2000, said it again many times before these sell-offs. Indecision and volatility will still reign, so stay tuned to the enhanced daily color guard report. Right, so you can get this guidance certainly every Friday in an extended view and every day in our daily color guard report. Okay. And just a week after that, we said that prudent investors should not buy stocks at this time, and aggressive investors and traders should play the market with a bias to the downside. Okay. Clear signals to be strategically defensive so that you can preserve your net worth. If you're building and managing your retirement nest egg, it's the importance of being able to do this is it's extreme. I want to take a look at a case study portfolio for an insurance policy on your portfolio. So let's give a quick example how you can protect your entire portfolio. Whoops. Okay, so this is just going to be a quick example. So now I'm going back. This is not one of those times that we noted here, but it is one I remember very clearly that happened in October of 2018. Okay, there was another big market drop towards the end of the year. That was a huge move. This is the S&P, not the VectorVest composite. It began early October, and if you guys, the one way to remember it is it came right up to Christmas Eve. That low was on Christmas Eve day, I believe, or the 23rd or 24th. Okay, huge. That was a huge move. All I did there was zoom in a little closer. Okay, near the beginning of October, our system showed a confirmed down call on October 4th, right? That's our most conservative call in the overall market. We said there's a confirmed down call. Okay. As a retiree, that is a great indication to become defensive and initiate portfolio insurance. Okay, that's what we talk about being strategically defensive. Recognizing the trend of the overall market and insuring your portfolio. We do that by using a simple option trade that anyone can do called buying a put option. In this example, we buy the put on the SPY, which is the ETF that tracks the S&P 500. Basically, if the S&P continues to fall, our put option increases in value, which offsets some of the losses on the stocks in the portfolio. Again, think of it as an insurance policy. You have an asset. In this case, happens to be your retirement portfolio. Your asset was damaged. If you have no insurance, you suffer the damage. If you have insurance, it helps to offset the damage to your asset. This is a theoretical setup here. We've done this many times in our group coaching. We have sometimes you buy insurance and you don't need it, right? But in this case, right, again, to illustrate the power of this for a $100,000 portfolio, if you were to buy just 3 puts, right, with the S&P, with the SPY trading just over $300 on that day, or day before, day after, whatever, somewhere in this range, it would have cost you $6.04 per share, or $604 for a contract, for one contract. Right, a put option rises in price when the underlying stock or ETF falls. Right. So in other words, for this $100,000 portfolio, you paid $1,812 for insurance. That's it. At expiration, had you held them all the way to expiration, your profit would have been, I'm going to round it up to 12 grand. Now, I'm not saying you would have held it right to expiration, but if you had closed that trade anywhere in this range, you would have offset the damage to your asset, or in this case, your portfolio, fairly dramatically. And that was just for three call. I just used three as an example to protect your portfolio. Elaine, a subscriber client of ours, this was back in 2018. Jim, because of your teaching, I hedged my portfolio at the end of January of 18. Now, this was January. 2018 saw two sell-offs. The January one was not as long as the October, but following this process, he invested under $1,000, and he sold his puts for over 23 grand. It was a very violent sell-off early in January of 18. Okay, that's what an insurance policy does. So, how much would this have benefited you during the prior market collapse? How would this have benefited you? And I can tell you as you type in because I'm going to take a sip of water, but it would benefit you because the time use of your money wouldn't be wasted for a year and a half waiting for the market to come back. Right? Okay, yeah. So, yeah, they're starting to come in. Yeah, Matt. Yeah, Matthew says clearly it would have helped a lot. Bob says yes, a lot. Jay says greatly, and it did save my bacon at the time. Jay says. Right. Well, that helps. Bill says he wasn't in the market at the time. But Bill, if you're in the market now, at least you'll know you'll be prepared for the next one. All right. So again, the strategic shift here is, you have to go from being worried and unprepared for the market to where you have that strategic defense system in place, which protects your hard-earned assets. Protection is an important part of your retirement investing model, and it's how you'll be able to not only build your wealth, but protect it, transform your legacy, and live financially free. Okay. All right, let's move on to the next P. The second P in our retirement investing model is profit. Now that you have a strategic defense system in place to protect your assets, you no longer have to be so ultra conservative when investing. Right? Doesn't mean we're going to go out and speculate and just buy, penny stocks here, but you don't have to be so conservative that you're worried about buying any type of stocks and not having a plan. Instead, you'll be able to take full advantage of the market upturns to grow your portfolio. Okay, in the past, you might have been plagued by buying stocks that didn't go anywhere or were too volatile, causing you to spin your wheels. So, to fix that, right, we need to have the mantra that we have here: buying safe stocks, rising in price when the market is rising. Right? Rising stocks and rising markets. For our retirement account, we want to look primarily at a stock safety, more so than anything else. I always have to go back to a baseball analogy. While it's fun to hit a home run, we know what most home run hitters do when they don't hit a home run. It's the new norm in baseball. It drives me crazy, being an old player for a long time. But we know what a home run hitter does, and we know that usually they strike out when they don't hit the home run. That's not what we're here to do, right? I'd rather be, I don't know if I'm going to date myself here, but I'd rather be Rod Carew, right, than I don't know, implant anybody you want who bats 210 but hits 45 home runs. That's my baseball analogy. So what happens is when you start to do that, you invest like someone that you're not, or in a way that doesn't fit your investment profile or what your objectives are. Okay, that's the last thing we want to happen, right? If you're not seeing the returns you want, the answer is not to go faster. Don't try to become a day trader or a really short-term trader to make your money back quickly if that's not your objective, right? You're not. This is not a day trading webcast. That's not why you're here. So don't turn yourself into one if you don't have a process or plan in place. So I have two boys now. They're a little bit older, but when I taught them to drive, right? If they were struggling or, a little uncertain in the beginning, I didn't tell them, hey, if you're not sure, just go ahead and slam down the gas pedal, right? And everything will be fine. Of course I didn't do that, right? I told them to slow down, right? We want you to do the same thing. It all starts with this quote from our founder, Dr. Bart DeLito. And he said a long time ago, good portfolio management starts with buying the right stocks, right? It's like coaching a team, right? Usually I have the 69 Mets up here, but you could put, or the 96 Rangers, you put whatever team you like, right? Think of your favorite team and when they were at their peak. Think of building your portfolio as if you were the general manager of a sports team. You put the best players on the field, on the ice, on the court, whatever it is. And it's the same thing with building your portfolio. So what I want to do, if you fill your portfolio with really good safe stocks, right? Just those stocks alone are going to help your portfolio do well before we even get into the process of managing them. Let me share the checklist of what we look at when determining the safety of a company. So I'm not going to go too deeply into all of these, but here's just a portion of what we look at when we analyze a stock's safety. So there's a lot that goes into it. It's earnings consistency, right? How often does the company meet or exceed its earnings estimates? We look at the company size, right? Company doesn't have to be, a huge company to be safe, right? But it is important and it's a factor that we look at. Price volatility. And I'm not talking about implied or historical volatility. Really, that's a more general sense of over time, 1 year or 3 year period. How volatile is the price of that stuff? We know nothing goes straight up, right? But is it resilient? Does it have that steady move to the upside? A real important one, debt to equity ratio, right? The ability for a company to withstand any headwinds that it might run into, right? Does that balance sheet measure out so, you know, that if there's a rough patch, does the company, survive it? How long has the company been around? Dr. D always said, better the devil you know than the devil you don't know. And then finally, dividend history, right? A good quality, safe stock doesn't have to pay a dividend, right? However, if it does, it better darn well continue to pay it and grow it. And those who do end up checking that box on our checklist. Right? So you don't need to be a stock market genius to do this. You don't need to spend a whole lot of time to do it. Okay, remember earlier I mentioned you leverage off others. Right? That's kind of what I want to walk through right now, and that leverage would be off of VectorVest. So let's go ahead and do this. Let's start by looking at a list of about 40 well-known companies. I put this list together and it's made up of places where you shop, where you eat, where you drink, where you spend your money. Okay. I just looked at the chat box and Michael typed in Dave Kingman. That's great. I love it. So let me jump into the program here. Let's jump into the program. So what I want to do, I'm in my VectorVest program here, and I'm going to go to the Viewers tab. And what I've done in the program here is created a watch list. Okay, and this watch list is a list of 40 stocks. Like I said, right? So I tried to pick stocks. There's no rhyme or reason other than the fact that these are familiar names that probably most of us are customers of, right? For Lowe's, if you own a home, I'm sure you go to Lowe's or Home Depot. You use a bank, there's Bank of America. You go online, you've got, Google, you shop, you got Kohl's and Target. You get the idea here, right? Microsoft, Netflix, these are all names that we know not only because of their stocks, but because we use most of these. Okay, so that's just the list that I created. It's kind of random, but it's really not. It's everyday stocks that we look at. Okay. So what I want to do here is sort these in a way. The default sort for these are by value safety timing (VST). Right, that's a proprietary kind of our flagship indicator. It combines relative value which is price appreciation potential, the safety of the stock, and the timing or the relative time. This is the technical indicator. I don't want to spend too much time defining each and every one of these, but just know fundamentals and technicals go into this VST number, and it's what our default sort of the list is. Okay. So no matter what day you look at this, the best stocks will come to the top. However, for what we're looking to do as a retiree or someone approaching retirement, we can be even safer. So VectorVest has this indicator that focuses, okay, on every component and more of that stock safety checklist I just went through, so that you don't have to. Okay, the indicator is called relative safety, or RS, and I can click here. I have the ability to click right on that RS and sort this list of 40 stocks by the relative safety indicator, which in the VectorVest program is on a 0 to 2 scale. Anything above 1.4 is considered excellent. Anything above 1 certainly is favorable. Okay. So I'm able to resort the list. So of course, I'm not saying you'd go out and buy, shares in all 40 of these companies. But let's see what happens when I leverage off VectorVest and I only buy the top 10. Okay. If I only buy the top 10. What I can do here is what's called a quick test. So what I like to do is I've sorted by relative safety. The date that I chose, I'm just going to go back in time. The beauty of the viewers page here is that I can take this back, so I can do what's called a quick test. I've chosen to go to January 2nd. It's a random date that puts us through some of the sell-offs, some of the great runs in the market. That's why I chose it. There's no other real reason behind it. Okay. What I want to illustrate here is the power of relative safety. So this is just not really random, but a list of well-known popular stocks. Some have really good RS, some not so much. But I'm able to take the top 10 high RS stocks here, and I can quick test them by simply clicking on that quick test button where it says top 10. And what we see here, and I like to sort them in order of, right? So here's how they performed from that day to right now. Right? The average profit there is 88.35. That's 31% annualized rate of return. If you bought these on that date and just held them, no money management is involved here. If you compare it to the S&P 500, it's pretty close, right? It's about even. But again, this takes into account no money management techniques whatsoever. Okay. Now, what I'm going to do now is click on relative safety again. When I sort these, again, I'm just looking at 40 stocks here, all companies you recognize and know. Relative safety is now, below 1 or unfavorable, right? Let's quick test those top 10 just to give you an idea of the power of relative safety. Right? Again, companies large companies that have been around forever. Look at that. Right? The lower RS stocks over that same time frame are up only 48% versus the S&P 500 at 86. Again, no money management in place. Let me take this one step further. I'm going to now go into the stock viewer page. In the VectorVest program, for any non-subscribers here, the stock viewer page takes a list of, we're currently tracking 9,064 stocks in our US database. We sort them by the value safety timing indicator. I can do the same thing here as I did in the watch list. I'm going to click on relative safety. And when I do that, it sorts with the highest relative safety stocks coming to the top of the list. Because why would I limit myself to just 40 stocks? Right? Now I have a pond deficient here of over 9,000 stocks. I've sorted them by relative safety. Okay, and let's go back, and I'm going to use that same date just to compare apples to apples here. So I'm just going to go to January 2nd. And you guys can do this on any dates that you'd like to. This is what the list sorted by relative safety looked like on that day. So instead of just containing myself to just 40 stocks or limiting myself, let's look how these did. Well, again, with no money management, taking the highest ranked stocks from a database of over 9,000, now we have done significantly better, again, with no money management. than the S&P 500. And as I showed earlier, and I'll show right now again, what the type of stocks and how we do even better than that. I mean, again, with the proper money management. And then the last thing I want to show is again to talk about the power of these stocks is to look at the 1 year graph. So I want to go back to the top RS stocks that are here now. So I can go in and I can just quickly graph the top 5 here. So this is the current look at the top 5 relative safety stocks. Okay, I'm just going to clear up the graph a little bit to show you. So down below is the earnings per share, and this is the movement of the stock on a 1 year graph. Okay, and you get a sense of how these stocks move and how earnings and safety drive these stocks. Okay, those are the type of stocks we want in our retirement portfolios. When we do that, when we're able to do that, right, these are the kind of results that I talked about earlier. This is a search that uses ruler stocks or high relative safety stocks. That's the search that we use here. Okay. So those are results there. If you could double your money every 3 years, which is what that portfolio I just showed you did, buying safe stocks, how would that affect your retirement? How would that affect your retirement? Yeah, Matt, it takes a second to come in. Matthew says game changer. Yeah, Bill says it would help greatly. Yeah, I know the answer. I just want you guys to interact with me because listen, this we already talked about how to mitigate these drawdowns, right? I talked about how to protect your portfolio here. Um, these numbers are, this is 45% annualized rate of return with very little effort and a very basic uh, process that goes with it. So, strategic shift from going slow and stagnant, from spinning your wheels in your retirement up and down to steady growth. That's the strategic shift that we want you to do and take part of. Finally, we'll come to the third P, which is provide generating income. The third P in our retirement investing model. Remember, you don't want to rely on your pension or your Social Security to carry you through retirement. So in order to continue living the lifestyle you're used to, you need to open up new income streams. Right? I had a conversation with Dr. DeLito a long time ago, and we talked about retirement, and I came back when we used to go on the road, and I talked to him about our subscribers worries and what we talked about, and in some way, shape, or form, the worry is always, how do I keep from running out of money in retirement? And Dr. D said to me in only the way that he can, he said, James, just tell him to keep making more money. So open up new income streams. First, you want to get paid dividends. One of the benefits in focusing on really safe stocks is they typically pay a nice dividend to their shareholders. Remember, high RS stocks don't have to pay dividends, but when they do, you can capitalize on that. Right? And I know everyone knows about dividends, right? But finding the best dividend paying companies for a lot of people isn't the easiest thing to do. And in fact, a lot of folks will make mistakes like this, right? You can Google good dividend stocks and you'll see all the results that you get. But here, what they tend to do is simply give you the highest dividend yield. Right? That's how they define what a good dividend. A lot of folks will define it. Well, it's got the highest yield. But are they good, safe, quality companies that are paying that dividend? And you'll see it in all of the, you can't get a real good look here, but you'll see that, based on the current dividend yield, it's the top one there. Right? Dividend.com does the same thing. It's all sorted by dividend yield. Doesn't tell me enough. Doesn't tell me near enough. Okay. So inside the VectorVest software, there are several lists that are pre-built for you. Right. So this is just touching the surface here. For example, you see a list of all the companies that have increased their dividends for 25 years or more. right? This was from back in October, but this is a watch list that is in the VectorVest program. The DRIP means the dividend reinvestment plan. It means that they all have a dividend reinvestment plan, and they've all grown their dividends 25 years or longer. And again, they're not randomly sorted here. They're sorted by value, safety, and timing, or VST. Okay. At that time, the top stock, one of my stocks that I happen to own, is West Pharmaceuticals. Now, this is a 5 year, actually, it's not a 5 year, I take it back. This graph goes all the way back to 1995. This is not earnings down here now, this is the dividend payout. Okay, usually I put this in gold so I can call it the golden staircase, as we used to refer to this type of graph pattern here. Right, so we're looking at a company that that continues to move to the upside. Those are the type of companies we want in our portfolio. This is the dividend growth. I showed this earlier as well. It's up 187% as of today. That's just capital appreciation. That doesn't account for the hedges that we had here, doesn't account for the over 50 grand in dividends, doesn't account for reinvesting those dividends. Okay, so finding the proper dividend stocks can get you not only the safe dividends, but also capital appreciation. Now, I want to talk for a minute about our second source of income, and we relate it to collecting rent from the stocks that reside in your portfolio. Right? You should be able to use one of the safest option trades available. It's so safe, it's the main option trade retirement accounts will allow you to do. Right? So I remember I took my Series 7 in 1992. And at that time, the only option trade you could ever do in a retirement account was selling a covered call. Why? Because selling a covered call added absolutely no risk to your stock position. And it was a great way to generate income. Okay. Selling covered calls is the most basic, the most popular option income generating trade that there is. You don't have to be an options expert to understand how to buy a protective put, which we already talked about, or to sell a covered call against a stock that you already own. Let's take a quick look and see how they work. Just to walk through this, just to give you a good foundation. Here's a graph of a stock that's trading at $176. Okay, instead, now it doesn't, the time frame and the stock doesn't matter. Stock is at 176. Instead of just owning the stock and hoping it goes up, you can sell a covered call. What is a covered call? Well, if you already own, or if you go out and buy 100 shares of a stock, okay, you need to own at least 100 shares to be able to sell a call against it. Okay. So here's the best definition of a covered call I believe that there is. It came from a gentleman named Lee Lowe that I use often and attribute to him, but the definition of a covered call is this. Someone will pay you money today for the right to buy 100 shares of stock from you, or take away your stock at a specific price by a specific date in the future. Right? A call option allows the buyer of the call to buy the stock at a certain price by a certain date. Okay. That buyer is willing to pay me to take my stock away. So in this example, the stock's trading at $176. I go out and I sell someone else the right to take away my stock at 180 bucks. And I receive $10.33 per share, or $1,033 for one contract. That's my money. They pay me. That's it. I own the stock at 176. What could possibly happen with that? Well, the risk is inherent in the fact that I own the stock. That's why they allow you to do them in your retirement accounts, right? So the profits from the call you sold cushion the position, and you would still have a stop in place just like you would if you bought the stock, but you could lose money if the stock goes down. But keep in mind, in this case, I have a $10 cushion because I took in $10 per share. What if the stock goes sideways? Well, that's fine. You definitely would keep the $1,000, plus you can turn around and sell another covered call against the stock that you already own. continue to generate income. And then finally, if the stock should take off, that's great because you make what would be the max profit. You keep the $1,000 and the gains from your capital appreciation, which in this point would be $4 more on top of that. Right, so you made 1,000 in premium plus another $4 per share, $400. So that's $1,500 on, not quite, just under $1,400. We'll call it. Okay, someone paid you to take your stock away at a higher price. Right. In fact, if you remember from Jerry from earlier, prior to learning this income strategy, he told us his investing was hit or miss and he had no methodology. After learning the covered call income strategy that we teach, he's now generating, again, over 2% extra each month. So let me ask you, how many extra income taps do you have now? And if you don't, what would those extra income flows allow you to do? You can type that in. Let me take a quick. William says, buy an airplane. Yeah, covered call. Let's allow you to do it. All right, great. So yeah, and again, it's going to help, right? It's going to allow you to keep making money. That's how you solve the problem of running out of money in retirement, right? Okay. So the strategic shift here is not having enough income, having that flow rust up on you to that steady flow of income. Right? That's the shift we want you to be able to make. Okay. So you showed up here for a reason today, or maybe several reasons. You're worried about the next market collapse, perhaps wiping away a good chunk of your nest egg. It's causing you to be too conservative and not being able to grow. Maybe your portfolio is just spinning its wheels and you're not able to grow it as the market continues to rise. Okay, maybe you don't have that income coming in to replace the paycheck that you were getting. Okay, you may be here today because you fear you're going to have to scale back your lifestyle, or even worse, you might need to rely on others. But maybe you're doing okay right now, and but you're not quite where you want to be. And perhaps for all of this, you have no plan to get to where you need or want to be. So, based on all of that, I hope that today that you learned it's possible to take control of your retirement. Okay, you don't need to be worried about a market collapse when you have that strategic defense system, that you can steadily grow your portfolio by using a solid growth strategy instead of spinning your wheels, and how you can generate a safe, steady income with new income streams using dividends and or covered calls. And the main thing I hope you learned today is that the secret to building wealth, transforming your legacy, and living financially free is to make sure your retirement investing model includes the three P's. Remember, I began by saying your retirement investing model is broken, right? If you're not taking these into account. So that brings us to the obvious question you're asking right now. How do I create this type of system in my retirement portfolio? How do I do that now? Well, I believe you have a choice. You can choose to do absolutely nothing and keep doing exactly what you're doing right now, but the same thing will keep getting you the same results. My fear is that you'll be in the exact same place this time next year, worrying still if you have enough money for when you retire. Right? You can choose to do it alone, maybe put together some of the things you've learned today and learn by trial and error, but we know what happens that, mistakes can be costly. You can choose to do what I did, what Jerry did, and what thousands of others have done, and that is to get right to the solution. Right? Why do all the work on your own when there's training available that allows you to bypass all that trial and error and get to success much faster? Okay. Instead of taking the long way from where you are to where you want to be, learn how to make that straight line, that shortcut. That way you get your retirement on solid footing as quickly as possible. Now, I want to give you the plan that if you and I were to work together for 5 weeks, literally you and me in a room every week for the next 5 weeks, here's what I would get you to do. Okay, first of all, it's a simple plan called the Retirement Portfolio Transformation. Okay, the Retirement Portfolio Transformation. Okay, Albert Einstein is credited with saying everything should be made as simple as possible, but not simpler. Okay, it's important that you understand that this is not a get-rich-quick scheme. I said earlier, you got to put some time into it, right? But not hours and hours and hours a week. Okay, it's not a get-rich-quick scheme. It's not some magic pill where should you expect results in the next 24 hours. It's serious, requires some effort on your part. If you're not going to commit to it, then I would advise you not to do it. It's not for you. And you can, thanks for taking the time, but you can log off now if you're not willing to put the effort in to do the work. It's for serious people who take their retirement seriously and are willing to put in that time and effort to learn the system. But this is why VectorVest was created and why we've put together this retirement portfolio transformation for you. Again, we put it together for serious people who want a simple plan to build and manage their retirement portfolio successfully. The system works, but you got to do the work. There's no magic pill. Okay, you need a plan. If you're willing to do what the plan that we lay out, you'll get results. By transforming your portfolio, you'll be able to build wealth for you and your family, transform your legacy, and create a better life for your children and grandchildren. Right? In other words, financial freedom. Okay, it's a simple plan called the Retirement Portfolio Transformation, a step-by-step roadmap to a secure retirement. The easiest way for me to explain the course, I'm going to take just 2 minutes out and map this out for you very quickly here. Retirement Portfolio Transformation. So if I map it out for you, we'll start here. Do you remember the 3 Ps I laid out, hopefully? The course will guide you through setting up the 3 Ps in your retirement portfolio. First, we'll build a strong foundation for your retirement. This is where you'll get clear on your goals and objectives, right? No matter what you're doing, whether it's investing, whatever form of life you're living, goals and objectives are what's going to get you to where you want to be. You have to remember there's a phrase I heard, I'm not sure who to attribute it to, I wish I could, but this phrase that has stuck in my mind for a long time, and it says that a goal without a plan is just a wish. Okay. Here you'll learn how to treat your investing as a business, get what we call the SMART goals and objectives. Okay, that's an acronym, the SMART goals and objectives, and create your own vision statement. Very important to begin the journey here. Next, you'll learn how to increase your capital with a safe growth portfolio. For your portfolio to steadily grow every year, you need to fill it with the right stocks and manage them the right way. In this module, we'll show you a tried and true process so you can complete your profit transformation. In Module 3, we'll do the same thing, but for the provide portion of your transformation. How to build and manage your prudent dividend growth portfolio. As I showed, between the income that comes in from dividends, the capital appreciation, and the process that we use, right? Dividends, remember, are a source of income every retiree should take advantage of. Not all dividend stocks are created equally, however. The outcome of this module is you'll know exactly how to identify the best dividend candidates. Right? You'll know when to buy them and how to manage them. In Module 4, we're going to complete the second part of that provide transformation by teaching you 2 of our go-to option income trades. Okay, selling puts and the covered call that I talked about. I didn't go too deep into selling puts for income. It's very similar to the covered call trade. But every retiree needs an additional source of steady, reliable income. Right? Banks, bonds, Social Security are not going to be enough. And again, you don't need to be an options expert. Everything you need to know is going to be taught to you right here. I'll show you how the trades work, when to implement them, and how to correctly set them up and manage those trades. Every retiree, in my opinion, it is of the utmost importance to understand those two trades. And then finally, a lot of people don't have a plan, as I said earlier, for when the stock markets or stocks go against them. You don't want to just sit there and worry about what could happen. You need to take control, right? Mark Twain once said, don't just sit there and worry. Do something, anything about what's worrying you so that you can have information, focus, and control over the situation. He went on to say that uh, I, I've suffered a great many catastrophes in my life. Most of them never happened. Right? So don't just sit there and worry. Know what to do. And that's what the Module 5 will do for you. How to preserve and protect your net worth. So by learning all of this, at the end of this course, you'll know how to grow your account, generate income, and protect your capital in all market conditions. So here's the thing. If I were to work with you, again, one-on-one for 5 weeks, literally just us in a room, you together going through this, what would it cost? Well, it would be $29.95 is what the price or the value of that would be, right? That would be the let's call it the retail price. The course, $29.95. We do get a bonus module. You also get 5 live mastery support sessions. And then we get a second bonus. Okay, invited to the group coaching sessions. Now, folks, this is all also completely guaranteed, right? And you're not going to pay that retail price I just showed you. You probably won't need this, but if for some reason you take our retirement portfolio transformation course and you actually do what I teach you, right? And here's the thing, you have to listen to this. Not if you buy it, but if you actually go through the course, right? Show that you've watched the videos, you've gone through the course. If for some crazy reason it doesn't work for you, if you're like the 1% that it doesn't work for and you feel we haven't taught you how to set yourself up for a secure retirement, just send us an email and within 7 days after the course ends, and we'll give you all your money back. That gives you the peace, that should give you the peace of mind knowing our confidence in this, first of all, and that it's right? There's no such thing as a risk-free trade in the markets. No such thing as a risk-free trade. You hit the button, you're taking risk. This is risk-free. Take the course, do the assignments. You don't like it, you get your money back. That's a risk-free trade. Right? So we're very confident that you love what you get from the course here. So again, if I broke down the the retail pricing here, it adds up. But I'd like to give you access to the full course and all the bonus module, the 2 bonus modules, plus 5 live mastery support sessions for each of those modules I just went over. Right? So you get the module, you learn from the module, and then we have a live mastery support session to implement those things. So there is a $595 early bird special that's good through Monday, this coming Monday at 5 p.m. That's what we call the early bird special. But because you guys were kind enough to take the time to be here, order before the end of this webinar, and I'm going to stay on for a while and answer any and all questions with my colleague John. Is going to hop in. We're going to answer questions, so you've got some time. Order before the end of the webinar, and we'll knock another $100 off that, and it will be just $495. Just $495. So you can go to VectorVest.com/transform, which John was kind enough to type into the chat box, so you all have access to that. Right. So even if you're an elite subscriber with us, for those who are familiar with that and are an elite subscriber, it's still going to cost less than the price by taking advantage of the $495. Go to VectorVest.com/transform. Okay. I'm going to click on that link in a moment and go through that. As you're considering this, just, there's a saying, right? It's never too late. And the saying goes that when's the best time to plant an oak tree, right? Well, the answer is 20 years ago. So you can be sitting under it now because it has shade now, right? So 20 years ago. But what's the second best time? When's the second best time? And the answer is today. It's not too late to begin to prepare for your retirement. Okay. Think of this. How much is it costing you not to do this? Ask yourself how much it would have cost you in 2000, 2008, 2020, 2021 in February of this year, and actually just recently in September. How much would it have cost you not to be prepared and understand how to buy a protected put? If that number is more than $495, let's just go ahead and fix this thing once and for all. Let's make it so you never have to experience those type of collapses in the market again. Let's make it so this year you begin to safely grow your retirement and generate consistent income every month. Go to vectorvest.com/transform. And you remember Robert from earlier, after he learned the information we teach in the retirement course, this is what he had to say. He said, I realized I could not rely on others and that I had to take personal responsibility. So back in March of '09, using VectorVest's unique market timing system with its fundamental and technical analysis techniques, I went into the market, and by the end of that year, I'd recouped all of my global financial crisis losses. Okay. So like I said, that's my plan, a self-paced retirement transformation series. If you order it before we're done here today, again, we're going to stay on and answer any and all questions. You can get it for only $4.95. Okay. So let me summarize everything for you quickly. VectorVest was started in 1988 with the hope of delivering great investing and trading opportunities to Main Street. Over the next 5 weeks, I'll show you how to set yourself up for a secure retirement. Okay. Just go to vectorvest.com/transform and take a step towards financial independence. We'd love to see you with us, and we look forward to working with you. If you know this is right for you and you're joining me, type 2 words into the chat box. Type in, I'm in. And again, if you have questions, John and I will stay on here and answer them while you think of those questions, or just go in there. Let me click on the link that John put in there and let me show you what you'll see. So again, vectorvest.com/transform will bring you to this page here where you can enroll. The regular price is $9.95, but this is good until for the rest of this webinar and for a short time afterwards. And if you sign up by Monday, you're still going to save money at only $5.95. So if I hit purchase course now, it's going to take me to the next spot here in a moment. At some point, it's thinking. There we go. And here you can fill in your order. My machine's a little slow here. If you're already a VectorVest subscriber, just click sign in and it'll allow you to go ahead and do it. Otherwise, put in some basic information and submit, and that's how you will get into signing up for the course. Okay. Let's see. First of all, I'm going to bring John in to answer some of the questions so he can help me, because a lot of stuff's coming in the chat box. Todd says that I'm in. James said just purchase. Thanks, Jim. Fantastic. What I want you guys to do is keep an eye out for in your email bin, and make sure you check your spam folder sometimes, and it will give you all of the instructions that you need, because you're going to have instant access to the course, by the way. You'll have instant access to the retirement transformation course, which I should bring up the university, and I will do that in a moment. So from here, what I'm going to do is bring John in. Take a quick sip of water. We're going to answer. I see questions coming. We're going to answer every one of them for you before we log off here. So John, if you can come on in and help me out here a little bit.
Hey, Jim.
How you doing, John? Thanks for helping out and answering questions in the background there. Appreciate it.
Excellent. Two most common questions that we have, multiple people have asked, which is the date for the sessions, when when it starts, and then related to it, what if you miss any of these sessions? What happens then?
Yeah, great question. Let me see. We don't have the slides here. All right, I'm going to have to look at my calendar when I do this. First of all, when does the course start? For those who have typed in I'm in and sign up today, you have access to the course right away. As soon as you get the email with the instructions, it might take a few minutes, give it a little bit of time, but you will have access to the course at that point. So I want to be clear now. there are two things here at work. There is the uh, the modules that you get that I talked about, that I went through step by step there. Okay. And then there are live mastery sessions that go with the module. So what I just did is I went into university.vectorvest.com so that I can show you what the program looks like. So I'm going to hit start course and it'll bring me up here. So you get access to all of this stuff that you see here, right? You get all the slides to everything. You get a whole bunch of information here. Okay, that starts as soon as you sign up. The mastery sessions. Okay, the mastery sessions, and I'm sorry I don't have the slide here, but you can jot it down. Will be every Monday at noon, beginning on the 29th of November. Okay, beginning the 29th of November, it'll be every Monday at noon for the next 6 weeks. We have the bonus modules as well as um, the other portions here. So actually 7 weeks. Okay, that begins on the 29th. So you get access to the course. You have through next week, and then we pushed it past the Thanksgiving weekend, the week, and those mastery sessions will begin on the 29th of November. Okay.
So two related questions on that, Jim. First, what if they miss the live sessions? What happens then?
If you miss the live sessions, and I'm just gonna, you know what, I'm not even sure. John, if you could type in to Paul, I'm not. Okay, you put it in. Okay,
Yeah.
I'm sorry, I missed that one there. Paul, just go to that link that John put in there. Um, I'm sorry, John. Say the question again.
So the question is, for those that miss those
Oh,
live
okay. Thank you.
sessions,
Yes, I'm sorry. So yeah, okay. So we have the live sessions every Monday at noon for 7 weeks. What happens if I miss that live session? Well, as I said, all of the modules are already recorded and archived here in the university. Okay. And what we do is we've done it a little differently here in this course than we usually do. And we broke it down to several videos. So it's not one long hour-long video. We take core principles, key principles and strategies, and we break it down into separate videos for you. These are the modules. You'll see here it says mastery session. Okay. When I click on the mastery session, what you see here is the mastery session from the last iteration or launch of this course. So on that first live mastery session, John and I record what, obviously the session, and then we replace this older version with the new one. So the bottom line on that is if you miss a live session, don't worry. Later on that late afternoon, early evening, this the session will be archived here in the university. Right? So if you can't make the live session, you still get access to it right here. Okay.
Jim, another question that we got in regards to the content was about options. How much, somebody wanted reassurance about how much option knowledge they need to have prior to the session, and how advanced would the options training be during this course?
Yeah, well, as I mentioned earlier when I talked about it during that portion of the presentation is you don't honestly you don't have to have any. Okay, you don't need to be an options expert. You don't have to take, some advanced options course or read 5 books before you do it. Okay, there are two option trades that I believe are essential if you're building and managing your retirement. If you're managing and preserving your net worth, understand how to buy a protective put on your portfolio and understand how to sell a covered call. Right? That module 4 will I will in modules 4 and 5 I will teach you everything you need to know on how to do that.
Question here is about the software for those that are not current subscribers. Do they have to subscribe first to be able to take the course?
No, we will get, if you're currently not a subscriber to VectorVest, and maybe it has it back in one of these slides here. If you're not currently a subscriber of VectorVest, we will give you, I believe it's 60 days trial period to it, so that while you're taking the course, you will have access to the VectorVest program. Okay. I know folks are asking the price of the program afterwards. You can go to vectorvest.com/product pricing. There are different things. I don't want to go through all those. If you decide that you want to continue with VectorVest at the end of the course, um, you know, you'll get a better sense of the worth and the value of having VectorVest, and we'll walk through the pricing, or you can get it right online. But um, we do give you access to it um, throughout the life of the course. One other, the second bonus module here is 5 weeks access to what we call the retirement group coaching. I didn't really mention that and go into detail on that. Every Tuesday we meet and we manage and build our portfolios, and go into great detail on, looking at certain positions, looking at the overall market. Is this strategically timed to be defensive? How are our portfolios doing? What can we do to manage them? And so you're all invited to that live session, which is every Tuesday at 2 p.m. And once again, if you cannot make it to the live session, we record it and we archive it in the university.
Excellent. Do you have a guesstimate of how much time they would spend on the course material? And then once they're done, kind of an idea of how long it takes to actually implement the techniques of the course?
Yeah, sure. Again, as I said earlier, if I close the other page, but as I said earlier, right, you're gonna have to put some time and effort into it, and if but what does that mean, right? Is it 8 hours a day? No. Each module, and this is one of the reasons we broke the modules down to individual recordings. None of the modules are longer than an hour. You could watch them at your own pace. That's the beauty of it. And now we've even broken them down into individual videos for each key core principle. Okay. So an hour, let's say an hour a day in the beginning, in the first 5 weeks, so that you can make sure you watch the module. We spend another hour or so during our live mastery session to implement them. So, a couple of hours a week for the first 5 or 6 weeks to get through the course. And then once you're comfortable with implementing the plans, again, this isn't some trading course where you're going to have to be in front of your computer all day. Um, the course is designed to make it. What was the quote from Einstein? Right. We make it as simple as possible, but no simpler. So my answer to the question is a couple of hours a week, and then after that, um, you know, less than that to build and manage your portfolios.
Excellent, Jim.
John,
For
how
those
much? What
people that
what what is a monthly? Because I'm tired of seeing these questions. What is the monthly cost of VectorVest? $89 a month? Is that it? Roughly.
there's
I know there's different versions, but
the
roughly 89
starting is
bucks.
69, the
69.
middle one is
Yeah,
99, real time is 149.
perfect. Thank you.
Yeah.
Yeah, worth every penny, right? To use a tool that allows you to, just from the market timing information and trends that you get, just that alone, right? To know when to strategically defend your portfolio. And listen, the bottom line is this, and I know I don't like to say this, but you to do what we teach you how to do, you can do on your own. For the people who are still here, I'm going to tell you a quick story. A long time ago, I was in Denver. It had to be 10 years ago. We were doing a seminar, and after the first talk, a gentleman came to me who looked like he hadn't slept in about a week, like he had 3 gallons of coffee in him. And enough so that I kind of went back into old cop mode. I used to be a cop a long time ago. I thought this guy was looked a little crazed. He handles me a crumpled piece of paper. He said, "I've spent before this course. I took all this time to manually go out and figure out the safest stocks." I'm paraphrasing a little bit. He did all his due diligence, looking through Standard and Poor's and Morningstar, and did all of the manual stuff on the fundamentals on his own. And he gave me a list of 8 stocks. "What does VectorVest say about these stocks?" he asked me in a very troubled way. I sat him down in front of my computer that was set up there. I went to what's called the Unisearch tool, and I went to the Prudent folder, which has a search called Ruler Stocks. And I ran the search. Right, the stocks in that have to have at least a relative safety number of 1.4, which, as I said earlier, is excellent on the list. And I ran it in real time, and I showed him the list. Right, here's the top 20. He showed me 8 stocks. 6 of the 8 were in the top 10. 6 of the 8. The other 2 were like 12 and 13 or something like that. Okay. That's what VectorVest does for you. Okay. I already showed about the market timing. That's a quick anecdote to show you how it helps you find the proper stocks. And that's the value of VectorVest, which I believe you'll see if you take the course, the risk-free money-back guarantee course, by the way, that you'll see the value of the program. But you don't listen if you don't do it. If you don't need VectorVest after, that's fine. If you like to drink a lot of coffee and stay up. Okay, so hopefully that
Jim,
helps. Yes.
another question here. Once they get access to the course, how long do they get access to the content for after the course is over, the
Yeah, a great
recordings?
question. Yeah. So what happens is once you sign up, you have access in the university, as I had up there, I showed. Oh, here it is. I have it here. You have access to this for 1 full year after the course ends. Okay, so again, our bonus modules. Okay, the retirement coaching group I mentioned, the 5 sessions you get, we invite you to, are archived here. You get all of this, and you get it for 1 full year after the course is over. Whether you sign up for VectorVest after that or not. Okay, whether you sign up for VectorVest after that or not. So even without VectorVest, you'll have access to the course.
Excellent, Jim. I'm going through these to see if we missed any.
Yeah, I'm trying to look. It's hard as they flow through.
Yeah.
I know a few folks typed they're in. Anyone else in? Type in. I'm in. And again, I want you to keep an eye out in your email bins because we'll send you all the directions that you need to get access to this right away. And again, to answer that question again, our mastery sessions will begin on Monday the 29th. Oh, great. Michael types in that he's in. Fantastic, Michael. Welcome. Um, we did this course a few months ago. It got some really good reviews. I think there's great information there as you build the foundation. So, Michael, welcome, and I look forward to working with you for the next 6 or 7 weeks. All right. I'm just looking through too here, John. If there's anything I can might have slipped through here.
Yeah, I think we got to the questions
Okay,
besides what we answered in the chat already.
great. Jerry says he's in. Jerry signed up. Welcome, Jerry. Again, keep an eye out for that email. All your questions will be there. And if you have any issues getting into the program once you sign up, I'll go ahead and type in 7638. If you sign up and you have any issues with anything at all, I just typed in our product support number. They will take care of you. George is asking, do you need any add-ons for VectorVest? Absolutely no, you do not. You do not need any add-ons. Um, we will everything you need for the course content you will have. And again, we talked about if you decide to continue with VectorVest, great. You should, because it's going to make your life easier and make you more profitable. But do you have to have it? Uh, no. But you don't need any extra add-ons when we're done. Um, Glenda says, what does the 595 include? Well, Glenda, actually it's 495 if you sign up before we're done here today. And what it includes is, let me put this down here, the full transformation course, which are the 5 modules that I just talked about. It includes the live mastery sessions, which review and implement all of those 5 modules. It also includes an invitation to 5 weeks of access to the members only group coaching sessions, which this is a separate thing we do. We have a members only group coaching that meets every Tuesday, as well as has its own separate membership site. But we like to, as part of being part of the course, invite you there to see how we actually implement. All we do in that Tuesday session is implement and talk about what we learn in the course. So that's why we invite you there. So you get access to that for 5 weeks. We do archive those, right? The retirement coaching group. If I click there, see, we give you, I think it's 5 or 6, I guess 6 sessions for that. So you're invited to 6 sessions. And I think that you will be invited to next Tuesdays. If you sign up now, I believe you will. Oh,
That's
well,
not correct, Jim.
that's not. If you sign up now, they won't be invited to next week.
No, it will start the week that we do the mastery sessions.
Starts the 19th. Okay.
Yeah.
See, that's why John's here, because he's smarter than I am and remembers all the details. Thank you, John. I don't want to misspeak on that. I was going to say I'll make sure that it works otherwise, but either way, you get 6 sessions with us. Either way, starting in this case, it would be on the 29th. Albert says that he is in. Welcome, Albert. Thank you for joining. I look forward to John and I both look forward to working with you. Monica's asking, will this work for Canadians? That's a question we always get here on these presentations, and the answer is yes. The concepts of, obviously we have VectorVest database and program for our VectorVest customers in Canada. Many of the concepts will work in relation to the Canadian market. The part of the answer I always give to that, Monica, is the options markets there are a little different, right? So they're not as liquid. There isn't, there are ways to protect your overall portfolio using, options there, but things like the SPY don't trade there. Okay. So you still can apply all of the techniques, especially for dividend stocks. A lot of great dividend payers in Canada, as well as growth portfolios. And you can use options, but I just like to be clear that it's not as liquid as in the U.S. side.
Todd's question is great. You see that?
I do. Todd has a great question, and it is, if I miss one or more mastery sessions, do I still have a way to get a question or two answered? And thank you, Todd, because what I didn't mention is there is a dedicated email that you'll have to send any questions at all to us about the course. So yes, Todd, and when you join, the email with all the information will have that email link in there for you. And so thank you for bringing that up. I forgot to mention it. We do go to, again, a dedicated email bin for the course. And what we do is sometimes I'll take the question and make sure that it's on my notes for the mastery session. But I'll always respond with the best answer I can give, but also illustrate it if it's that type of question as well. So that's always there for you.
You
I'm
just
sorry.
to clarify that, Jim, for him, which is that when we answer, we will bring it up during the mastery session so that you can see your question answered in the recording, even if you're not available to watch it live.
Right. Yeah. Yes, and that's true for many of the questions. Sometimes there are very specific ones that we'll answer by email, but most times if it's something about the process that we've taught in the module, or something that needs to be illustrated, or show an example of, that's the beauty of the 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 mastery sessions, is we record them and archive them there for you. Robert's question about on the UK side, my answer, Robert, is similar to Monica on the Canadian side. Um, in your commenting, I don't know if you wrote that before I mentioned it or after, but options are less favored, is the way Robert phrased it. Um, um, so if there are other defense measures to take on the UK side, I'll be honest with you, I won't be going into details specifically on the UK side, how to protect using options there. Um, so I just want to be honest on that. I won't be doing that. The concepts are still there. You'd have to take them and apply them on the UK side on how you might be able to use the tools available on the UK side. But I'm not going to sit here and tell you I will specifically talk about UK vehicles to protect your portfolio, because I won't do that. So maybe not the answer you want to hear, Robert, but an honest one nonetheless. Monica, you're welcome. Todd, you're welcome. Paul says he's in. Fantastic, Paul. Great to have you. Um, Again, keep an eye out for the email. Any questions? I typed in the product support number there. Give them a call, but you should be able to access. Again, you have access to the course. As soon as that email comes and it gives you the instructions, you'll have access to it. And again, because of the holiday week, we will begin our mastery sessions on November 29th, and it'll be every Monday through there. George says he's also in. Welcome, George. So you too, keep an eye out for that email. Great to have you. Look forward to working with you. Okay. Kevin also says that he's in. Welcome, Kevin. Thank you. Again, I look forward to working with you guys. Uh, Remember, keep an eye out in case you don't get that email. Again, it doesn't come exactly once you hit the enter button, but it will come soon. Keep an eye out on the spam folder, and if there's any issues, call product support. Yeah, Robert. David might be somebody who, well, not might be, he certainly will know a lot more about the UK markets and ways to do that. But yeah, as far as what I'm offering here, I just wanted to be clear and honest about that. All right, John, we're going to give him 30 more seconds, and then I'm going to get ready to log off. So, folks, if you have any other comments about what we talked about, the importance of building and managing your portfolio is, that's why you were here today. We put this course together with what we believe is the best way to build and manage the portion of your retirement nest egg that goes to the equity markets, right? You have to have a process, you have to have a plan, right? As I said earlier, that quote, a goal without a plan is just a wish. If you're just looking for some meme stocks to maybe get lucky one day, then that's not going to get you there. All right. I don't see anything else coming in, John.
I agree.
I do believe this will be sent out to you guys. The recording of this video will come out to you guys, to watch again, and for those who signed up for the presentation but couldn't make it. So
Yes.
yeah, okay. So I'm going to go ahead and end it here. Again, thank you all for taking the time. Stay safe, stay healthy, and remember, you still have till Monday if you choose to sign up. You know, the, that early bird special is good till Monday at 5 p.m. You'll still have a few minutes after we're done to take advantage of the 495. So with that, on behalf of John and all of us here at VectorVest, once again, thanks for taking the time to be with us. Stay safe, stay healthy, and we'll see you guys next time. Bye for now.